Welcome to She Wins Women, Wealth, Wisdom, and Legacy, the podcast where financial empowerment meets fearless living. If you're a woman who's built a life with purpose and is ready to align your wealth with what matters most, you're in the right place. Your host, Carol Eddy, is a certified financial planner, financial educator, and passionate advocate for helping women live fearlessly and leave a legacy. Whether they are preparing for retirement, managing an inheritance, or simply looking for trustworthy financial guidance, Carol has helped her clients feel confident in their financial plan for over 25 years. Each week, she'll share insights and practical strategies to help you create financial freedom, navigate smart money choices, master your money mindset, and make winning decisions now and for the next chapter of your life. No intimidation, no overwhelm, no jargon, just wisdom, clarity, and the confidence to manage your wealth, embrace your power, and craft a future you love. Welcome to the show.
Hi, and welcome to the show. Today, we're diving into a topic that many women put off, long-term care. Now, if you're thinking, that's something I'll deal with later, or I probably won't even need it, I want to lovingly challenge you on that, because this is a decision that affects not only your finances, but your freedom, your family, and your future. This episode is especially for you if you're a woman who wants to protect your independence, you're helping an aging parent navigate their care decisions, you're single, married, divorced, or widowed, or you have a significant savings or inheritance and want to make sure it lasts. Let's talk about what long-term care really means, how much it costs, and the three main ways women like you are planning ahead to make smart, empowered choices. I'm taking a deeper dive into this topic, so it might feel overwhelming. It's one of the reasons I'm covering it in a podcast. I want my listeners to be able to stop, rewind, repeat, or fast forward through any part of it. Many clients I encounter are unaware that some of these options even exist. So part one, the silent worry so many women carry. You may not talk about it with friends, you may not even mention it to your spouse, but there's a quiet fear that many women share. What if I need care one day and I'm not ready? You might be healthy now, independent, traveling, taking care of grandkids, running your business, or managing a household. But here's the truth. Most women will need long-term care at some point. In fact, women live longer than men and are more likely to spend the last years of their lives needing some level of help. And yet, planning for it often gets pushed aside. Some women tell me, it feels overwhelming. Or, I thought Medicare would cover it. Or, I'll just deal with it when the time comes. But here's the hard part. If you wait until you need care, your options are limited. Your choices shrink. Your costs go up. And your family may have to make decisions under pressure, sometimes without knowing what you really would have wanted. I remember a conversation I had with a woman we'll call Evelyn. She was 68, retired, and living comfortably on a pension and investment income. One day she called me and said, Carol, I'm embarrassed to admit this, but I've done almost no planning for long-term care. I just assumed I'd die in my sleep like my grandmother. I told her gently, Evelyn, you're not alone. Most women I speak to have the same assumption. But if we hope for the best and plan for the worst, we're actually giving ourselves more freedom, not less. That conversation became the start of a powerful shift in her life. And that's what I hope today's episode will do for you. Part two, my father's story. Let me tell you something personal. My father was a wise man. He worked hard his whole life, and like many people, he thought he had accumulated enough assets to draw from for potential long-term care needs. He planned to self-pay. In 2001, he was diagnosed with pancreatic cancer. He underwent treatment and fought to extend his life as long as possible. He survived for 18 months. He was initially able to self-pay. However, as time went on, he required increasing assistance and eventually hired 24-hour caregivers to care for him in his home. I helped him through much of this care. I lived in Colorado and he lived in Indiana, so there were many flights to Indiana over those 18 months. The one thing I didn't consider was how difficult it was to file all the Medicare and hospice paperwork. He went in and out of hospice care several times, mainly because he wanted to go on antibiotics or something, and he'd have to go off hospice to receive that care and then go back into hospice once that was done. Luckily, we had friends who were nurses and knew how to submit everything to get many bills covered either through Medicare or hospice. A few weeks before he passed, we had a discussion about the 24-hour care and calculated that it would cost $175,000 per year just for the caregivers, who weren't even nurses. And that didn't include expenses not covered by Medicare. We realized the potential strain on his finances if he were to live another year. That never played out because he died shortly after. As a financial planner, I have seen this happen to others, but when it's your own family, it hits differently. You're not just managing money. You're managing emotions, your memories, your siblings, and relationships. It definitely opened my eyes to areas I haven't considered before. I learned a great deal since I went through all these steps with him. I share this not to scare you, but to say, I've lived this, and I know how much better it can be when you plan early. Part 3, what long-term care really costs. Let's talk about the numbers, because most people underestimate the true cost of care. According to the Genworth Cost of Care Survey, which is based on national statistics, a private room in a nursing home now averages around $9,000 a month. I think here in Colorado, that's closer to $10,000 to $12,000 a month. Assisted living runs about $4,500. I would say here it's about $5,000 to $7,000 a month. And in-home care averages $27 an hour. Here in Denver, anywhere from $25 to $35, maybe more per hour. So that means if it's $27 an hour, it's $5,000 a month for full-time help. Multiply that by 2 to 5 years, and you're looking at $200,000 to $500,000 plus in costs, not even including medical expenses or home modifications. Now, women assume that Medicare can take care of these costs, but here's the truth. Medicare only covers short-term rehab after hospital stay, and only under certain conditions. So if you need help with daily activities like bathing, dressing, eating, transferring, which is getting in and out of bed or a chair, and continence, which is bowel and bladder control, you're on your own financially without long-term care coverage. I once worked with a woman we'll call Janet. She had cared for her mother for 2 years. Her mom had Alzheimer's and eventually needed round-the-clock supervision. They thought they could keep her at her home, but after several safety scares, they realized she needed some memory care. It cost $11,500 per month. Janet told me, I had no idea it'd be this expensive. If I had known 5 years ago, I would have helped her get insurance or set money aside. This is why we plan, not because we expect the worst, but because we want to keep our freedom when things get hard. Part 4, why self-paying may not be the answer. Many women tell me, I'll just use my savings if I need care, or I'll pay out of pocket. That sounds logical, but let's look how this plays out. If you need $400,000 for care and plan to use your 401k, here's what happens. That $400,000 hasn't been taxed yet. If you're in a 32% tax bracket, you'd owe $128,000 in taxes. So you need to withdraw over $525,000 just to cover the $400,000 worth of care. And if that happens during a market downturn, you might be selling investments at a loss, which would compound the damage. You'll also miss out on future growth of those funds. I talked to a woman recently who explained that she had learned this the hard way. She was 70 years old and in good health, but her husband was declining. They had no long-term care coverage and decided to pay privately. They withdrew funds from a large IRA. They hadn't realized that those withdrawals would spike their income, push them into a higher tax bracket, and raise their Medicare premiums for the next 2 years. She said to me, it wasn't just the cost, it was the ripple effect. I wish someone had explained how quickly it all adds up. This is why planning matters, because what seems simple today can become incredibly complicated and expensive when you're in crisis mode. Part 5, the 3 main ways to plan for long-term care. Let's talk about your options. There are 3 main types of tools women use to plan for long-term care. Each has its pros and cons and fits into a different kind of person. Option 1 is traditional long-term care insurance. This is what most people think of when they hear long-term care. You pay a monthly or an annual premium, and when you qualify for care, the insurance pays for it. The pros of this policies are generally they provide the most benefit per premium dollar that you pay. They have flexible coverage, which includes home care, assisted living, and skilled nursing. And it can include inflation protection. The cons, if you don't use it, you lose it. premiums may increase significantly over time, and I've seen cases where premium have increased so much that the person can no longer afford to pay it. And this is why I'm almost always concerned about someone who wants to take this path. And the last con is that you must qualify medically, although there are qualifications on other policies too. An example is Margaret was 64 when she first called me. She just retired and wanted to get her finances in order. During our planning session, I asked her, "What's your plan for long-term care?" She paused and then said, "I don't really have one. I figured I'd just use my savings." We ran some projections, and with her net worth around $2 million, she could afford care, but it would impact her legacy goals. Margaret ended up choosing a traditional long-term policy with a monthly benefit of $6,000 per year in a benefit period and $3,000 compounded inflation. Her premium was under $4,000 per year. She told me a year later, "I feel so much better knowing I protected my assets. I don't worry about being a burden anymore." Option 2, hybrid life insurance policies with long-term care riders. I know that's a mouthful, but this type of policy just combines a life insurance policy with a long-term care benefit. So if you don't need care, your heirs get the death benefit of that policy. If you do need care, you can use the benefit while you're alive. The pros, you get something no matter what. The premiums are guaranteed, which means no future increases, and the benefits are generally tax-free. The cons is it requires a larger upfront investment, and it may not provide as much monthly benefit as a traditional long-term care policy. Joan and her husband David, both in their early 60s, had recently downsized and freed up some equity from their home. They were concerned about long-term care, but they disliked the idea of use it or lose it. We explored a hybrid policy funded with a one-time payment of $100,000. The policy gave them more than $250,000 of long-term care coverage benefits and $150,000 of death benefit if unused. Joan told me, "This feels like a 2-for-1. I don't want to gamble with our care, and this is why our kids will get something if we don't use it." Option 3, annuities with a long-term care rider. Annuities can be an excellent option if you're over 65, have significant assets, and are less focused on life insurance. How it works? You invest a lump sum into an annuity. If you need long-term care, the payout can double or triple for a set period of time. The pros are that it provides a guaranteed income stream, it has enhanced payouts for long-term care, and it's usually easier to qualify for because underwriting is less strict. The cons? It can include complex terms and often requires an expert to help you review it. And there are also potential surrender charges if those funds are withdrawn early. Linda, age 70 and recently widowed, had a $1.5 million in investments and was worried about needing care later. She had a history of arthritis and some minor mobility issues. We placed $200,000 into a long-term care annuity. If she never needs care, it continues paying income. But if she does, the income benefit triples for up to 5 years, giving her $600,000 in care coverage. She said, "I don't need the bells and whistles. I need stability, and I want to be sure I'm not a financial strain on my kids." Part 6, what happens if you do nothing? I want to talk honestly about what can happen when there's no plan in place. When care is needed, either suddenly or gradually, and there's no strategy, it creates a ripple effect. And the ripple touches every part of your life. I once worked with a woman we'll call Dana, who was thrust into the role of caregiver overnight when her mother had a fall. Her mom had no long-term care insurance, no designated funds, and no clear wishes written down. Dana was suddenly juggling hospital bills, home safety renovations, and hiring part-time help, all while still working full-time and raising a teenager. She told me, "I love my mom. I'll always be there for her, but I wish we had talked about this sooner. It would have saved so much time and heartache." If you do nothing, your adult children may have to quit jobs or rearrange their lives to care for you. Your savings can get eaten away faster than you ever imagined. You may end up with fewer choices because decisions will be made in a rush, not from intention. I've seen siblings fight, bank accounts drained, and inheritances disappear, and caregiver burnout. Doing nothing doesn't protect your independence, it puts it at risk. Part 7. What happens when you do plan? Now let's shift gears. Let's talk about what it looks like when you plan ahead. When a woman has a long-term care strategy in place, here's what happens. She gets to make choices: where she wants to live, who she wants to care for her, and what kind of support she receives. Her family has clarity, no guessing, no guilt, just clear steps to follow. And her wealth is protected. She's not scrambling to liquidate investments, pulling from retirement during downturns, or triggering unnecessary taxes. Let me introduce you to Barbara. Barbara was 66, single, and had no children. She was fiercely independent and clear that she didn't want to be a burden to her nieces and nephews. Together, we built a plan using hybrid life long-term care policy funded from a low-performing asset in her portfolio. It gave her over $350,000 in care coverage and left $150,000 death benefit to her church. Years later, she called me after a minor surgery didn't go as planned. She needed some temporary help at home. Carol, she said, this is exactly why I planned. I made one phone call and my policy started covering the cost. No stress, no shame. That's the power of planning, not just peace of mind, but peace of action when it matters most. Part 8, your next steps. So let's talk about what you can do today. First, you can download the free long-term care summary, which basically I took the 3 types and put the pros and cons into that so you have them handy. And it breaks down the 3 main options that we covered: traditional long-term care, hybrid life insurance plus long-term care, and annuity-based solutions with care riders. You'll see side-by-side pros and cons and see which solution might fit your situation. It'll be in the show notes. Step 2, start the conversation. Whether it's with your spouse, your advisor, your adult children, bring it up. Use this podcast as a starting point. The earlier you talk, the better your options. Step 3, reach out to me. If you're unsure which solution fits your values, timeline, and financial plan, feel free to contact me with any of your questions. And step 4, share this episode. If it helped you, it will help another woman too. Share it with a sister, a friend, or a coworker. This is how we support each other, with wisdom and action. And of course, if you love this information, please don't forget to subscribe to my channel so you never miss an episode. You are not too late. You are not behind. You have options, and you are allowed to protect yourself, your family, and your future. Planning for long-term care isn't about fear. It's about freedom. Freedom to choose how you live. Freedom to receive care on your terms. Freedom to leave a legacy of wisdom and intention. I hope today's episode has opened your eyes and empowered your heart. You've got this. Until next time, take care of yourself and the future you're building. Thanks for listening.
Thank you for joining us today for the She Wins Women, Wealth, Wisdom, and Legacy podcast. If today's episode sparked a shift in how you think about your money, your future, or your legacy, imagine what's possible when we walk this journey together. And if you found value in today's conversation, please share this episode with a woman you care about. Together, we rise and we win. If this inspired you to take charge of your financial future, don't stop there. Download your free guide, A Woman's Guide to Triumph in Every Decade of Her Wealth, by clicking the link on the screen or in the show notes. It's designed to give you powerful tools and clarity at every stage of your wealth journey. And be sure to follow or subscribe now so you never miss an episode. Until next time, stay wise, stay empowered, and remember, it's time to rise, lead, and win with your wealth, your wisdom, and your legacy. As a reminder, the content shared on this podcast is intended for informational and educational purposes only. It does not constitute personalized financial advice. For guidance tailored to your specific situation, you can schedule an appointment with Carol. This is an independent podcast not affiliated with Money Concepts Capital Corporation.